Sarah Borks in Quito. In conjunction with REIT's REIT Week 2020 Virtual Investor Conference, I'm joined today by video link with Tesh Durvasula, Interim President and CEO of CyrusOne. Tesh, thank you for joining me today.
Thanks for having me. Really appreciate it.
CyrusOne had its second highest leasing volume in the first quarter. What were the factors behind that growth, and have you adjusted your expectations for the rest of the year?
So I'll take the first question. The second question first is no, we really haven't adjusted our expectations. In fact, we've been saying that the word of the year seems to be fluid. The situation is extremely fluid, though we did start Q1 off very well. It's a long year. The impacts of COVID on buying patterns, on other social behavior, on the rest of the economy, both in the United States and globally, we're still gonna feel those impacts. So we're pleased with our start, but we're cautiously optimistic about the rest of the year. In terms of the start, that was really a really good quarter for us. It was really a function of three things. We had a pretty muted Q4 of 2019, so there were a bunch of bookings that probably should have got done in Q4, but they slid into Q1. So we got off to a really nice start in January. And then in February and March, we continued our normal business as usual push. We were accelerated by a 20 plus megawatt deal in Europe with one of our big cloud companies. And that deal absolutely helped us have better numbers than normal. And then March was the typical every public company making that last 30-day push to close out the rest of the deals. So we didn't feel a big COVID impact because we were just pushing normally. And I think by the time when we closed our offices, which was March 13th, we pretty much had most of the quarter already done. Only had 2 weeks left, so we didn't have a big COVID impact on our Q1, and it was accelerated by the fact that we had a big cloud center deal done in Europe. So,
can you talk about the growing role that Europe is playing for CyrusOne?
This has been strategically one of the best moves we've ever made. So over 2 years ago, we announced the acquisition of the Xenium assets, which were Germany and in UK. And what happened is that we probably got a late start. We announced it in late 17, but we didn't actually own the business between European regulators. We had to wait till September of 18 before we could actually operate. So 19 was really our first full 12 months of operation. We had kind of the last 3 months of 18. And what we realized is between the two sites that we bought with acquired by acquisition and the two sites that we bought did organically, which were Dublin and Amsterdam, we then had a nice 4-city platform, and we were off to the races. And customers wanted our product. They came by and visited our sites and realized that we did a nice job. So we doubled the number of customers in the first year. And in Q1, it probably represented about 35-37% of all of our bookings in 19, which was really nice for the first year of operation. In Q1 of this year, it represented over right around 60% of our bookings. So this has been that's a fantastic immediate impact. By the end of 2021, Europe will be about 16% of our overall business, and we'll be over $1 billion revenue company. And so on a kind of a 3 to 5 year projection, we always thought it should be roughly about 20% of the overall business. And by end of 21, which will be the third year, we feel like we're right on track. So we're really excited about what we've been able to do in Europe.
More broadly, how do you expect the pandemic to change demand for real estate across your sector?
Real estate in our sector has been, been very, very good. Most of my competitors have announced a record, very high to their record quarters or very high leasing in Q1. But I think we have to balance that with, intuitively and kind of intellectually, we know that digital infrastructure wireless, data centers, fiber optics, all should be kind of going up and to the right. This is the time that these types of assets should do well. However, I balance this weight with the fact that you still have in the United States about 40 million people not working, and probably somewhere between 30 and 35% of the planet not working. And that's not sustainable. So we're cautiously optimistic that, you know, our infrastructure should survive really well through this pandemic, but we have to be better about understanding what the rest of the needs of the consumer economy are. And the thing that I'm looking at is kind of global unemployment. As we start getting people back to work, I think, you know, I think I should be looking at the trend around, right now it's 25, 26% unemployment. If that trends down to 15, 16, and then gets into single digits over the next 6 to 9 months, then I'll feel really comfortable that there's a place for us to, you know, land after this. But if it's still not in single digits, I think it's still going to be a pretty bumpy flight.
Tesh, thanks so much again for spending time with me today.
Thank you.
And for more news and information on REITs and listed real estate, be sure to visit NAREIT's website, REIT.com.